Markets in Israel were closed today for Passover, and ahead of the holiday, the finance ministry trimmed this year's economic growth forecast because of the fighting with Hezbollah and Iran. Growth's now expected to be between 3.3 and 3.8%, depending on how long the conflict lasts, a sharp reduction from the previous forecast, 5.2, after the Gaza ceasefire was announced. On Monday, the BOI held interest rates steady for the second month, and it was geopolitical uncertainty, of course. Governor Amir Yaron is the governor of the Israeli Central Bank. He joins me tonight from Tel Aviv. Good Yom Governor, for Passover. Let me just start on the economic front. This cut in growth, it's not surprising, obviously, because of what's going on, but it doesn't bode well in a sense because you've got higher prices for inflation and you've got lower economic growth. You're heading to the perfect storm here.
Richard, good evening. First of all, let me say, obviously, this event now is, I'll turn to Israel in a second. This is a global event. A lot of the effects will be determined, as you mentioned, by its duration, and obviously the outcome at the end and the various geopolitical outcomes that it might end up with. And they can affect, obviously, whether the straits are closed, whether prices come down relatively fast, or they prolonged at a high level for quite a long time, in which case we will see damages to both inflation and the economies. And we already see that priced in the markets, especially in Europe, for raising rates, and in the US holding rates for longer. As far as Israel, we've lowered our forecast from 5.2 to 3.8, and this is under the working assumption that this battle continues until pretty much the end of April. So it's a very, specific working assumption. And we expect, given this, we expect a rebound in 2027, in some sense, what we expected in 2026. And inflation, because Israel is has LNG, somewhat less prone to inflation due to energy, but still obviously exposed. We expect inflation to go up to 2.2 by the end of 2026 and 1.8 by the end of 2027 under this assumption. And therefore, we signaled 1 to 2 cuts by Q1 27.
Right, but you've also got the problem of increased spending on defense. And I know that the bank is particularly concerned. You've warned the challenging time that there needs to be on the government spending side, there needs to be more restraint. Is anyone listening?
So you're absolutely right. And first, just a perspective, the government made significant adjustments during the 24 and the 25 budget, exactly as the bank suggested. In the 26 budget, and in particular in the update to the budget that was done in the recent week or so, due to the campaign with Iran, things have gone to what we think is a deficit that is going to be above 5%. So my statement was, it was good that the budget was passed because it provides for economic continuity, it facilitates economic continuity, but it was really fitting at this point to avoid any, deficit spending measures such as coalition money and tax reductions at this challenging point in particular. Let me say that's for 2026. I think the big challenge is going to be in the 2027 budget. This is when Israel faces what I call its fiscal trilemma. On the one hand, making sure that our debt to GDP, which is expected to end in 2026 around 70.5%, to make sure it is on a path coming down. At the same time, continue to
Right.
fund security expenditure, which are still under almost all scenarios are going to be higher than prior to the 7th
Okay.
of October. And on third, let me just finish that. We still have to invest in important growth engines such as education and infrastructure. How do you do that? You need to eliminate budget items that do not incentivize certain segments of society from going into the working place, from getting the right skills, from coalition money. And unfortunately, this will pretty much likely involve also raising taxes in order to bring all these three elements together.
That last answer went into a real political hornet's nest, both in terms of the cost for the Haredi education and the lack of investment. But I want to just ask, is there any evidence that international investors are shunning Israel, either on philosophical grounds or because they're worried about the economic situation and the geopolitical stability of the country?
So, Richard, first of all, it's important to note the Israeli economy and the Israeli public have shown great resiliency throughout this 2.5 years since the 7th of October. We've seen investments in high tech, if anything, increase in the last several quarters. We've seen more investments if it's private equity companies. We've seen even hedge funds having more interest in coming here. The Israeli stock market has overperformed relative to others until this last campaign with Iran. And even now, our stock market, the exchange rate, and the risk premia have all moved relatively in a very moderate fashion relative to other markets.
Governor, I'm grateful to you, sir. Thank you for joining us tonight. We'll talk more, hopefully, when either you're in New York or I'm in Tel Aviv. Thank you, sir, for joining us. The Governor of the Bank of Israel. More than